To big tech earnings as Alphabet sets a high bar, crushing estimates last night, beating on the top and bottom line, reporting a 35% surge in its cloud business, and said AI investments were paying off and seemingly helping margins. Up next, Meta, Microsoft, Amazon, Apple. For more, let's talk to Ron Josey. He's a senior internet analyst at Citi Research. Ron, now that we have Alphabet in the books, what does that make you think about the rest of the field?
Look, Kelly, I'm of the belief that performance advertising is in a pretty good spot. And I think that bodes well for Meta and Pinterest and several others. We saw that with Google. We saw that with Snap to a certain extent, and we certainly saw it with Reddit. We also heard that Google Cloud did better last quarter with growth reaccelerating to 35%. I think that bodes well for AWS, for Amazon, as we see that number tomorrow. So how does it make me feel? It makes me feel as if the broader tailwinds that we saw in 2Q seem to have continued into 3Q. And given where I believe the consumer is and given the demand for performance advertising, I think that bodes well for 4Q and ideally into 25 as well.
What is going on to take sort of a sidebar trip to Pinterest? Is that just a big move for a beaten down stock, or is there something bigger to glean from that?
Look, I think the thing with Pinterest, what we're looking for is basically just continued consistent growth. And they've done a very good job of launching new products, getting newer users, particularly those Gen Z, on the platform, except that they are more exposed to certain verticals that may not be in this, call it, performance advertising bucket. And so food and beverage, CPG being some of those verticals that I'd highlight there. So it's just a matter of time before we actually see that coming back.
I misspoke because what I meant was Snap, actually.
Oh, got it.
Yeah, my fault. There's the return of the, I don't want to call them the once high flying platforms, but Snap is a standout.
Yeah, look, I mean, the thing with Snap, we've had a lot of ups and downs, and what we're looking for, and I think the broader street's looking for, is just stability. And as they redesign their platform with simple Snapchat, as the DR business actually does pretty well and is holding up pretty well, I think you might get that stability. Now, we need to see a few quarters of that to continue, and great to see the move today. But our view here is more around, let's look for stability. Let's see a few quarters together of just better results.
Your view on Amazon?
Sure, Tyler. Like Amazon, in our view, there's several things that we're looking for. One, I think e-commerce demand. I think e-commerce is actually going pretty well. We talked about how consumers holding up, and back to school probably was a benefit, Prime Day, and of course we go into the holiday season. But really the focus on Amazon is two things. I'd argue it's AWS growth, and the cloud results at Google yesterday suggested AWS is pretty well positioned, or should be at least. We're looking for accelerating growth there. And then it's profitability. And there's a lot of debate whether AWS profitability comes down as they need to invest in growth. And frankly, if you're growing in the high teens, low 20s, you should be investing. But I actually think profitability would hold up relatively well. And then the second debate on profitability is that margin on North America retail. And it's just a matter of time before that just continues to go higher, notwithstanding the shorter term investments in Project Kuiper and maybe on supply ingestion that they're working with their third party.